Hello everyone, so let's go over US30, 17th of September, so that's where I last left it. We was expecting a bearish move for the New York session, that's here. This arrow is the New York session and we got that towards the downside. I haven't made a picture for this yet, but I'm just going to go over it like I do in the other videos. So we're going to go down to the 5-minute time frame and we'll just stick to that. So as always, previous day, you look at the previous day here. New York session, this would be a premium sell area, discount buy area, you drag them along like normal. This line here was the old all-time high, so you can see that's being used as bullish support before the mop takes place. And then we zoom in. And I think I explained a bit of this actually in the last video. The mop, pre-London, London opening, and London opening takes place, pushed up, and we tried to sell here, tried to sell back towards the London opening, moved to break even, that was break even hit, then we stayed out and saw this just continue towards the upside through the London session. So there was only a break even hit on that London opening, but you can see we're moving into a premium sell area. So the main areas to be focusing on here is your premium sell area. As you can see, it's not being respected in the London session. Then we move on to the previous day high, which is above that premium sell area. So that's the previous day high. So now what we do is going into the next day, we can move that back a bit. So here is, I think we had retail sales this day. It was some kind of news like that, and it was around, yes, I did label it up here. So this red candle here, that is your retail sales or whatever news it was. The news release, that's your high volume time. This is your pre-New York, and then you have the arrowed one, which is the New York opening. This is the previous day high. You can see we just about take it there. Some people got that little move down, but it's not a real liquidity clearance, so you don't expect too much from that, because it's just, you can see how the candles just about take it and then they leave a bit of liquidity behind there. There's no real liquidity sweep candles, so this is just being seen as a small movement down. So people made small profit on this downwards move, then price continues towards the upside, takes that high, then we go sideways. That's when we start to get into our real trades for the New York session. Like I said, New York opening here. At this time, you wouldn't really see much because you've got that consolidation along there. You're still looking for a reversal of some sort. And the reversal would be a retracement at least. Where would we be retracing to? We had a few areas to target. We had this area here, which is the London opening, then the Asian session low down here, and then the premium buy area from yesterday. So these were the main three areas we were targeting. So that's TP1, TP2, and TP3 down here. Because if price comes all the way down to here, you see resistance being hit, then you expect some sort of reversal because they would be adding towards their buys from yesterday. Now, stick to the 5-minute time frame. New York opening takes place, pushes up, takes the high here. Obviously, you get into the sell there. So that's one little sell you could have got into. By the time you get down to here, you move your stop loss to break even. And as it clears this low, you would take some partial profits, and then you would have been stopped out. So we are only looking for sells here, really. You could have took the buy from the London opening, but you wouldn't have really be expecting that, because you'd be expecting a further retracement because you've cleared the previous day high. That is a major liquidity pull. So you'd be looking for a major bearish move. And this move here is just minor because it's done at the New York opening without any real structure. This bullish move here is when the volume starts to kick in. So that is why this liquidity grab of this high here, don't know if I got the right colour on. No, so I'll use a different thing. So this liquidity grab here on these candles is more major than the smaller ones here with the New York opening, because it shows you more volume and it's respecting these levels. So you could have got the buy from here if you saw that, but I wouldn't be expecting you to. So that push up is increasing volume and it's following a higher time frame bias. The liquidity grab is here, so once you start to see reversal happening, that is your opportunity to sell. You'd have been selling around here somewhere, I'd have thought. Stop loss at the high, and then as price comes down, New York open, you'd move to break even. That's a retracement. So this retracement, you'd be expecting to stay below this low here. And then that volume continues towards the downside. You might have even thought, okay, come down to there, I'm going to start buying. Either way, you would have made break even or profit. Because you're selling here, you're targeting the New York open, you're buying here and you're pushing up. And as you get to support and resistance, you would have moved to break even, and as you can see, the volume continues towards the downside. So my bias around this level would be towards selling. I would be looking for a stronger sell than a buy. So I would clearly be selling from up here, and I think I did take the sell from here, but it didn't last long because I got knocked out as I moved to break even, and I think I got knocked out on one of these wicks. Price comes down, obviously, moves into profit. As you clear this low, you take partial profit. That's your TP1 for the session, which is the London opening. Zoom out a bit, and then TP2 was the Asian session low, and then TP3 is this main area. This is the discount buy area, and you can see we've got a big wick or rejection candle off that area. So this goes into the afternoon, and that shows bullish strength there. You obviously could have took a buy there, but I would, if you take a buy in the afternoon like that, I always use smaller lot size, because these kind of moves can continue on into the next day and they're likely to be big moves. So there's no need to go big on the stop loss. You're only going to make yourself sleep less because you're worrying about your trade. It's better to go smaller lot sizes, just use the low as your stop loss, and you'd be letting it go into the break, into the close, because now that becomes a discount buy area. So even going into the next session, you expect this discount buy area to hold. And you can see it goes into the next day, all the way through the London session, and by that time you'd have seen, okay, we're going sideways, I need to switch up a bit. And then you'd have took some partial profits and then got knocked out at break even, I'd have said. You can see how that goes back down to the discount buy area again. So that is the 17th of September. Took one sale in the London session, took one sale up here, small profit, and then one sale here, break even, and then the main sale was up here after that volume started to kick in. So this was the main move for the New York session. That was a nice, easy bit of profit. Now we go on to the next day.